61% of the expected proceeds from the Alibaba IPO will go to those insiders Rochelle mentioned, and company executives and early investors. And perhaps one of the biggest concerns then is the same as that for Facebook's 2 years ago, and that the large amount of IPO selling being done by Alibaba insiders and what that will mean for the post-IPO stock price. So to answer that question and more, we're joined by Nick Colas, Chief Market Strategist with the Convergix Group. Nick, good to have you on the show.
Thanks so much.
So Nick, this is a big concern for some, given that only about 40% of the proceeds are actually going to go into the coffers of the company. We had a similar case with Facebook where a lot of the insiders, a lot of the founders walked off very wealthy, and then the stock dropped. Is this a potential concern?
It certainly has been a concern for investors and those looking at the deal. The offsetting argument that says it's probably okay is, first, the company is very profitable, so it doesn't really need a lot of proceeds from the deal to be able to have to reinvest and grow the business further. The second is you do want a lot of liquidity with this transaction. You want to be able to trade shares and build a good position as institutional money manager, so having the additional shares is actually a positive.
But what would that mean for potential retail investors who want to get in on the day of the IPO?
It seems very much that the company's focused and the underwriters are focused on institutional investors as a core audience for this deal. Retail investors will get a smaller allocation than they usually do. The customary number is 15 to 20%. This number will be closer to 5%. So it'll be very tough as a retail investor to get a stake.
Tough to get your hands on that much sought after share. Now, Nick, you've just released the results of your Alibaba IPO Roadshow survey of financial industry participants, and the vast majority expected the price to be at the higher range. What are some of the other interesting points that your study revealed?
That's right. The indications from the study show that the people that we surveyed were very comfortable at this new revised range of 60 to 68, but it also showed that they now expect less of a pop on the first day. IPOs tend to get a nice little bounce on the first day of trading.
Well, Nick, that was a big concern, and that's why analysts were saying that they priced on the conservative range, because they wanted to avoid what happened with Facebook, where the stock actually dropped afterwards. Now, with this increased demand and with a share at the 68 range, is it a concern that we're going to see that drop?
It seems so far that it's not a very large concern. There's a very good book in this deal, it seems to be, because the underwriters were able to increase the size of the deal by increasing the price. And there is still optimism for that first day bounce, but it's not as big as it would be if the price were lower.
Nick, less than 48 hours to go before the IPO on Friday. What's the main focus for Jack Ma and the team?
The main focus is twofold. First, get the deal all done, get it priced correctly. They'll be working with the underwriters tomorrow very intensively in the afternoon to make sure that the price that they decide on is the accurate and good one. And then it'll be a matter of having the brokers in charge of opening the stock the first day do a good job through that first day. You very rightly point out there's a lot of concern, can the market handle this much volume? That's going to be the big concern.
Hands.
It is out of their hands.
That's up to the New York Stock Exchange now and the brokers, right?
That's right. But it also is a matter of making sure that they created the right sense of demand and the right book of demand so that in the aftermarket, the people who wanted the stock will still want it.
Well, demand has been the key word here, and we're constantly hearing about overwhelming demand. And Nick, this is despite a number of concerns, including the issue of variable interest entities, the fact that China's government does not actually allow foreign ownership in such big stakeholders like this, the idea of minority shareholders and their rights regarding management. There was Alibaba's extravagant acquisition streak. There is the idea of monopoly, Alibaba being so big, and government regulations. Have all of these concerns been allayed, or are investors just looking past this and looking at the bigger picture?
They seem comfortable with those. Those are all very valid concerns, and we heard about all of those from people that we polled in our survey. However, the offsetting factor is the global economy is growing so slowly that it's rare to find a big company that can grow at the pace that this company has and generate the kind of results and margins this company is generating. So while you have some structural concerns, the offsetting question is, if you're a growth investor, if you like growth, where else are you going to find it than the internet in China? Well,
you mentioned growth, and the valuation has Alibaba at around $25 billion if it does price at the higher end of that range. Are you comfortable with that from a price to earnings ratio perspective?
You know, it seems very much this is going to be a standalone kind of transaction. It's very hard to point to even a handful of companies that are true comparable companies to do the valuation work. Investors are flying a little bit blind.
What about Amazon and eBay and JD.com? Can we look at them as potential peers in the evaluation?
There are some, but for example, Amazon is one very often mentioned with U.S. investors. The offsetting factor is Alibaba is quite profitable, as we all know, where Amazon still struggles to maintain any sense of profitability. So from that perspective, it's very hard to do the apples-to-apples comparison. It's going to come down to how much investors really want to be a part of this story and how much they can hold on to that story over the first year as they expand the company further.
All right, well, Nick, this is set to be the biggest IPO. Obviously, this is having a ripple effect on the markets. As we spoke about earlier, it's having what analysts are calling the BABA effect. Some people freeing up cash from other stocks in order to have the liquidity to invest in this. And other shares, proxy shares, are riding the wave along with Alibaba. Who's benefiting?
You know, the biggest thing that's really opened people's eyes about this transaction is if you look at the top 10 list of U.S. IPOs over time, they're all household names, but they're U.S. household names: Visa, General Motors, Facebook. Now we have a Chinese company with very little exposure in the U.S. coming in at number one. The biggest thing we hear is that there will be appetite for more Chinese IPOs after this transaction, as long as this one's as successful as we all hope it is.
All right. Well, a lot of pressure and a lot of hype for Friday's big IPO. Thank you so much. Nick Colas, Chief Market Strategist with the Convergex Group.